Hey, what's up guys? Today we're gonna talk about how to not get missed out or not get left behind by a Wyckoff schematic. Either it's a distribution or a accumulation. What I mean by that is, let's say we have a certain POI here, then we use Wyckoff as confirmation. Let me just fix this for a moment. So we're waiting for a schematic here. Price is going up. Then we make a UT, UTAD, then breaks of structure. So as you can see, we make a PSY, preliminary support, buying climax, UT, and a UTAD, then breaks of structure there, meaning it's now a valid Wyckoff. Then we want, of course, good RR, so we marked up a sniper entry over here, or a more refined zone. Either it's a supply zone or some imbalances. Then what price does is it fails to go up higher. Instead, it continues to the downside to continue its markdown. I'm pretty sure if you use Wyckoff, you have noticed this or have seen this type of scenario where you get left behind, and it's very common, especially if you're doing intraday trades or scalping. So I'm going to talk about that now. So we're on EU as usual. Let me just delete this. We're on EU. What do we see? We're on a downtrend. So we're looking for sells at the moment, since overall we're in a downtrend. Then we look for a POI or a supply zone. So we see this last up move before the down move over here. Then the question is, again, you don't need to find the perfect or the perfect supply zones, or what the order blocks you call it. You don't need to find either which is the actual valid one to trade off, either this one, this one, this one, or this one. The thing that matters is how you react, or how your rules or strategies or strategy reacts on that certain point. So I could trade here, then just manage my trade. Either I partial or I move my stops to break even. Price can go lower, then can continue higher. Either way, I could take some partials on these zones here and move my stuff to BE. Then I could trade again from either this zone, or this zone. Same thing, wait for a schematic, which is Wyckoff, a distribution, for confirmation for my trades. Now, so we have this POI marked up over here. Then do we wait for a confirmation or a schematic? Now, as you can see, remember that a supply zone has most of its orders lie on the 50% of it, which we have here, 50%. Price tapped onto it, then we are good for sells. Then how do I look for schematics? As you can see, I see a UTAD, write this backwards, UT, a buying climax. Either this is the buying climax or this is, but let's just mark this up, ST. Then we have the AR over here. Then we have a break of structure at this point. Then we can enter on either some of the zones. So we have the schematic here. Then remember, again, a schematic can happen inside a schematic. So what I did here, I took this trade, but I'll explain later what happened. I actually took it from this zone. As you can see, let's go on the 15-second time frame. This is how you use the seconds time frame, or this is how I personally use it. You see a UTAD, or this could be just a UT, since it's a schematic too, then a buying climax over here. So we can, let's just mark up this zone as a Wyckoff. And again, have this other zone here also as Wyckoff. So either you can trade on this Wyckoff here, or a distribution here, then, or either you can trade on this larger distribution over here. So what I did is, as soon as it broke structures, you can see, broke this multiple equal lows over here, then I marked up this refined POI over here. or in other time frames, that is a order block over there. Where was it? And yep, there it is. As you can see, the last up move before the down move, I had that marked up, so I had a sell limit there. And I also have a sell limit over here. I mean a sell stop, because again, this is the main topic for today, how to compensate on not getting left out. Because price, let's say price was at this point, price could either, on the 15-second, so price could either push low and continue to the downside aggressively and not testing to your refined OBs over there, or either price can push, test your OB over there, then continue to mark down, or it could just stop you out to either make a larger schematic or just continue to the upside. That's why we risk manage, because we can never predict the market. So what I did here is I had a sell stop over here. So as soon as price broke out from these equal lows over here, at a sell stop over there, then I entered a trade. So I have a one running trade now, because I know since we're in the seconds time frame, it doesn't really matter anyway, since it's already a very tight stop. That's a 3.9 pip stop. So this is still a valid one. Unlike if you're in a 4R, let's say this is a 4R, then this could be maybe a 80 or 50 pip stop. So it doesn't really matter if you have this large zone, because we're in the 15 seconds. So I have a sell stop there. Then I had another sell stop. Sell stop over here, then a sell limit here, because either price could go up from just this 50% of this imbalance here, then continue downwards, or it could touch this 1 minute OB over here, or supply zone. So I had this in mind, that if price break before the schematic already happened, I already had a written rule where I'll enter 2 times, because I could get left behind. Then it happened to me multiple times. Back then, even last week, I got left behind on 3 setups, because it did this. We have a schematic here, and what price did is push down, did a tiny pullback, then continue to mark down and left me behind. So what I did, I entered here. Then again, also per trade or per setup, I risked 0.5%. So this is a single setup over here. We just entered 2 times. So what I did, I divided it. So this is a 0.3 risk and a 0.3, roughly 0.3 or 0.2 something, as long as we overall our risk is 0.5. So I entered there, and what price did, luckily it's tapped it. Look at that sniper entry, then continue to the downside. So what actually happened on that trade was, where was price? Oh, there it is. Wait, okay, my bad. So what actually happened on that trade? What's happening? Oh, there it is. It's just, so as soon as price, so I had 2 entries, right? So as soon as price keeps breaking, oops, do a replay, and as soon as price keeps breaking down, think on as soon as price broke this structural point here, as soon as price broke the structural point here, I move my stop to BE over here on this tighter entry, since I was expecting price to just keep doing this move. And don't forget that on the bigger time frame, I was also aware of this, because on the bigger time frame, price could just look like this. Let me just, let's say, I think on the 15-minute or 30-minute time frame, let's say this orange is a 30-minute time frame. So I was aware of this, but I was more keen on protecting my capital, and this was what was part of my rules. So as you can see, price breaks, continue, and continue, blah 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 blah. As you can see, oh, wrong color, my bad. So let's say this blue line here is the 1 minute structure, and this orange line here is the 15-minute or the higher time frame. So I was aware that price can go up here and tap out my stops, but my TP was somewhere here because I had just a minimum goal, so I was expecting price to just pull lower before retracing back up to continue to the downside. So you also must know how to read structure from a top-down analysis, because it helps you on how to put your stop and how to manage your trades and where to exit, where to partial and stuff. Then as soon as price broke this structure point over here, this one broke it, then I moved my stop to BE on the second trade. Then as soon as price broke this point here, I moved my stop from this second entry to BE. Then I moved this another entry to here, and I wasn't partialing because I want to try it out. So this one is already up, I think, yeah, 3-1, and this one is BE. So I think my TP was here, so it was very close, very close. This was my TP. As soon as price, as you can see, that's what price did. So I have to be aware of other structural points. As soon as price went to this low, I had my stops managed already, then went back up to test maybe an OB here, supply zone there, then continue to mark down, which is already here, which I measured earlier. It ran 1 to 50. It happens all the time. I could have said, and this is the problem with traders, I could have said, I should have not moved my stop to break even, or I should have kept it there. But what if price went up higher? Then I would just say the same thing again, but vice versa. Then, oh man, I should have put my stop on BE or something, or at least tiny profits. So that's why I always have a rules before you take the trade, or a plan before you take the trade. So the price was still here at this point, already have planned out that I would take 2 entries. Then this is what I do: if we have a structural shift, I move my stop there, I move my stop there. Then yeah, follow your rules. And again, this is how you won't get missed. So what I showed then was, so let's just imagine there's a POI here, then we wait for a schematic. As soon as it broke structure, we can enter here the breakout, because again, as I explained, price could just pull back a little bit then continue lower. So this is one method. Have a sell stop over here, so as soon as it breaks out, meaning confirming your schematic, then you can enter immediately. And another way you can enter too is, let's just do this, a more refined entry. And again, I explained this on my Wyckoff video, that this is less probable to get hit, but it's more RR, so more profitability. So this is another method too. You can enter here, or you can mix up the same what I did. So I had 2 entries, sell stop. So price, I would be happy if price kept going lower, and I would be more happier if price went above this and tapped my sell limit here and continue lower. So another method is having your stop here on the POI here, because again, price, as soon as it break, you can have a sell stop here. Price could fully mitigate this OB over here, then continue to the downside. Same with this one, same with the refined zone. With that one, you could enter here, sell limit here, but have your stop on this larger POI or OB. Just remember, price could keep going higher to mitigate this 100% and go lower. And another way you can enter is by looking on two refined entries, because sometimes you've noticed that, let's say price was here before it broke structure, does a last up move before the down move, it continues lower, meaning there's an or OB here and another OB here. So either way, if you want a more refined entry, or better RR, or more profitability, is you can enter there. Also, you can have another entry here. So if price breaks this, either price can tap it and continue to the downside, or price can tap the higher one. So you took an L here, but again, this could run like 1 to 11 easily. So you could also do that. And another way you could enter is by using this. So let me just explain this. So this blue line here is a POI. Oops, my bad. Blue line here is a POI, or an order block. Put an OB. So we have an OB over here. Then we wait for confirmation, which is a Wyckoff schematic or a distribution at a certain point. So we mark this out as a breakout. Then let's say you just have one entry over here. So we have this entry over here. Then we look at price. Then as you can see, price didn't fulfill it, or didn't touch this refined OB. Maybe just tap into this larger OB over here. Let me mark it up. Maybe just tapped into it, which it did, then continue lower. So what you can do if you want a more refined zone or a more tighter stop at this point is, as soon as price, so again, this is the reason why structure is super important. So we have a schematic here, breaks of structure, making it a valid one. Wait, let me just fix it up again. So as soon as it breaks structure, then we can expect that either, so we're expecting a pullback like this, but it failed to do that. Let's say price did this. This happens multiple times. So it keeps continue going to the downside. Then technically you can enter on this OB here. Then price could tap it without looking for a schematic inside it. You can just enter, so set a sell stop there. But again, you have to consider the larger time frame. What is the larger time frame doing? Let's say this is the larger time frame. Let's just make this a little bit bigger. As you can see, we want a retracement back to this upside, even though either a retracement to this OP here, or just retracing back down there. So how do we enter on this point? Let's say if we missed on this entry, or price didn't tap this entry. So what we would do is look for the tiny time frame. As soon as the lower time frame, as soon as the lower time frame breaks structure of this minor structural point, lower high, lower low, lower high, lower low, lower high, but breaks it. So this is a higher high, higher low, higher high, higher low, higher high. So we're expecting a bullish move to follow this larger time frame structural move. As you can see, lower high, lower low, lower high, lower low, lower high, lower low. So we're expecting that. As soon as price, the minor structure, this blue line here, just erase this. As soon as price breaks structure over here, then you can delete the sell limit over here, since we're expecting now price to continue to the downside since it broke this lower high. So we're expecting this, right? So either as soon as price broke, we can set a sell limit over here. There should be an OB at this point. So either enter at this refined OB, or enter on this larger OB, which price, the larger time frame, should tap in. So hopefully you learned something. If you have any questions, put it down in the comments below, and see you soon.